What up traders, what up investors, Ken here from the Dyslexic Investor. We're going to be doing something differently today. So in the link down below, there's going to be the ARK investment Big Ideas 2020, and they basically break it down between different technology segments, from deep learning to ride hailing to electric cars to other technologies that are making the world a better place and so forth. So we're going to watch each little bit of the overall 5-minute video, and in between the different various cuts, we're going to be talking about the individual stocks that they will be looking at, or different things that you should be looking at within that section of whatever sector that we'll be talking about. Alright guys, so let's get started!
Deep learning is one of the fundamental computing platforms that's transforming the world today. When I think back over the last 20 years, the most productive period of investing maybe have been from the internet. Since the IPO of Netscape in 1995, the internet as a whole has contributed over $7 trillion to global equity market cap. We believe deep learning, which is a specific form of AI based on training from data and machines that learn by themselves, could generate over $28 trillion over the next 20 years. In the beginning, we were optimistic because we saw such amazing breakthroughs in image recognition, but now we're seeing new breakthroughs in conversational AI. Machines not only understand images and text, they now understand how to speak to us, how to sound like humans, and how to respond in complex business scenarios.
Alright, so we just watched the deep learning understanding of how computers and algorithms are going to help us make our lives better. So one of the stocks that I think of, and I actually currently own, is the LivePerson. So this stock is a company that does, when you call an airline company or whatever, they're going to have the self-automated robot voice, but more human now, and being able to do more tasks. So it's learning from different various conversations. Again, this falls anything. A lot of people are going to be thinking of basically a lot of Google or Alphabet, and then Amazon. They're just really using the data they get to such crazy extents to make these algorithms to make your life better and them to make more money. Probably the latter is more important to them. But anyways. That being said, so LivePerson, we're going to go through LivePerson, Amazon, and then probably Alphabet. Maybe some AMD, but AMD is going to be coming up in a lot of other sections within this. So LivePerson, again, this has been a crazy market correction. It's going to be really tough to buy in here. I need it to settle a little bit here. It needs to kick up some volume. It's just been literally a falling knife. Really don't want to be touching it here. I did add a little bit, around 20 bucks. Sorry, 21 bucks, right about in this area, but then we gap down and we're still kind of hovering around there. Again, I don't know if this is the bottom, but this is a long-term hold, like a lot of these stocks that we'll be talking about. Next, we're going to be going to Goog or Alphabet. Oh, not GG. We're going to look at G. All right, so this again has been falling as well, quite drastically. Is it a buy here? It's still below its 200-day. I need to see some more of positivity in the sense of gapping up some more, maybe closing some of these gaps. Again, these moving averages are pointing pretty much to the ground. If you go here on a monthly chart, it's just it's still below the 21, which has not closed below the 21 in a really long time. So this could be a change of momentum. If you want to do a starter position, this is a very pricey stock. This is going to be a hard one to buy, but if you have an account that can do fractional shares, this would be a great one, I believe, to add. And last but not least, for this one, in this section, we're going to be jumping into Mr. Amazon, the Bezos company. Again, this thing is pretty ripe here on the sense of the monthly chart. I feel like this one can go potentially significantly higher. It has not been beat down as many other companies because Amazon is diverse right now, and they're using the data and the overall learning of algorithms and how how humans interact with their products. And I think this is just ripe for the picking. Amazon is basically gonna just know everything before we even think of it. So I just think the stock, and this is something I need to get fractional shares into, because this is it's $1,700 now, but this was $2,100 a couple weeks ago. So that is that. Let's go ahead and jump into the next section.
Streaming technology is being used to deliver more and more content over the internet. With streaming, consumers have instant access to massive content libraries of video, audio, and games. So how does this translate into an investment opportunity? According to our research, streaming revenue, which is roughly $86 billion today, should reach $390 billion by 2024. Not only is streaming a long-term growth opportunity, ARK believes it is reshaping viewer habits and well on its way to becoming the primary technology behind content distribution.
All right, so once you think of anything streaming online, of course, everyone just literally goes right to Netflix. So Netflix, again, with this overall coronavirus and everything's going on, is a pretty good play in the sense of it hasn't been beaten up as many other stocks. There's basically just right below its 200 here on the daily. If we punch it out to a week here, it's still fairly valued in the sense it's a lot of momentum moving forward. And then if you go to the full-on monthly chart, like this thing looks quite fantastic. It's above its 21 on the monthly chart. And that is a very positive look for Netflix long term. Again, they talked about 2024 and that basically revenue can double within the streaming of movies and audio and so forth. So between Netflix and then another position that I have for our little portfolio is Activision Blizzard. Activision Blizzard is a gaming company, but a lot of the stuff they do is they stream esports. A lot of their games is within their Activision Blizzard Battle.net app, and a lot of companies like NVIDIA, which we're going to be NVIDIA's going to tie into the very end, because NVIDIA basically checks the box for multiple of these sections. So that's kind of like be the secret sauce here. So if you can kind of see what I'm going with is like NVIDIA has its hands in literally every single part of this process. Again, this hasn't been nearly as beaten up as a lot of stocks. It's basically just below its 200 day. The weekly, it's showing a little bit of signs of weakness. It's below the 21, but if you pump it out again to the monthly, we're just at the 21 here, and momentum is slightly still going up on the monthly chart. So that being said, it had that huge drop due to a lot of layoffs and some overall spending and expenditures that it's going to be, fine and dandy with a new Call of Duty and Overwatch 2 and WoW once they update that again. Not make a completely vanilla version, but whatever. They got a dividend coming out here on the 14th of April. And I'm sure people are looking forward to that. And I think there's one more I want to do. I want to use Spotify. If you're not sure what Spotify is, basically that is, along with the Apple Music, is basically the #1 streaming app that I believe I can think of. It has been beaten up in the weekly chart. Literally, it's been trending in a range of like 160 to like 115-ish here, back and forth. It hasn't hit its lows from previous quarters, but we'll see what happens. Not a big fan. I don't have a lot. I don't have anything in this yet, but we'll see it going forward. So let's go ahead and jump to the next section.
We believe that automakers will transition to EV production as battery costs fall, enabling price parity with like-for-like gas-powered cars. The result? Based on Wright's law, we forecast EV sales in 2024 will be 37 million units, roughly 6-fold higher than the consensus estimate, and bringing the EV market to over $1 trillion in revenues.
All right, let's be honest. If we're talking about anything EV, it's got to be Tesla, 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 Tesla. All right, so let's jump into Tesla. Everyone knows it had that monster run since basically December of last year, all the way up to $968, and then kind of folded back, and then now it's kind of coming back down. Currently trading around 550-ish, and you can kind of see here where my alerts are on. I kind of want to see this kind of hold here. I did add into this position on the way down about around 575, 600-ish. Adding meaning created a starter position moving forward. The daily chart doesn't emphasizes the importance here. I want to pop it to the weekly chart. The weekly chart is very keen here. I need this to kind of hold right around the 535 level, and I want this to be honestly to trade sideways for a little bit. Trading sideways a little bit for the potential to jump higher, moving forth with the new battery day that's coming in April and other various things on the positivities within the EV market. And again, it's not just EVs, they have great solar panels, and moving forward, Tesla is light years ahead of a lot of other manufacturers within the EV space. And if you pump this out one more time to a monthly chart, it just basically is like, wow, this monstrous run kind of needs to slow down, technically speaking, to kind of be trading sideways potentially, and just wait for the next big catalyst to make it pop significantly higher. All right, let's go to the next clip.
While autonomous ride-hailing may come later than promised, we believe it could be a larger opportunity than originally estimated. In fact, according to our research, if we knew the winners today, we think we would pay $1 to $2 trillion for those companies and $5 trillion by 2024. And today's ride-hailing companies are likely not to be the biggest beneficiaries of the future autonomous ride-hailing market. Instead, companies that own the full technology stack stand to control the best economics. In the future, we believe that companies in the automotive, logistics, retail, and insurance sectors that do not adapt may become obsolete.
So autonomous ride-hailing, this is going to be a lot of in Tesla's wheelhouse as well, but another technology which I've said basically throughout a lot of these kind of falls into a lot of cards that NVIDIA's playing currently. NVIDIA has a lot of the great processing and graphics to be able to give the technology to the VWs, the Mercedes, and things like that to allow their cars to be autonomous in the future. Again, like everything else on the charts here, basically it has been pulled back a lot, but this one has been performing quite well. It's bouncing off its 200-day on the daily chart, and on the weekly chart, we're not even we're sitting pretty even here. Like the overall, the company is not being too hit by all this, the crisis of a lot of the Corona stuff. But on the monthly chart, like we've had that huge pullback basically of 2018, which took it back down all the way to basically 130. And that was just a heck of a move. But I think anything, again, if you want to create a position here, just start a position here, I think that I could, I'm looking at doing that here from my opinion, from my standpoint and my money and my portfolio. But I kind of want to buy it here at this level, kind of down a little bit here. Like you're never going to get the perfect price, but we'll see what happens. On the monthly chart, it's kind of been so far down here, so just a little bit more selling here coming in, because it basically hasn't erased. It's only been erased maybe since the last 2 or 3 months on NVIDIA. But it's a great technology and so forth. So NVIDIA is basically going to cover a lot of the sections and so forth. And another one, just ride-hailings. They're saying that Uber, they can get the stuff to Uber. So Uber and Lyft, depending on how you look at it, Uber has just been killed due to the fact of it's just like a car. No one's going to get in someone else's car right now due to the travels has been basically cut to zero. Everyone else is not being able to make money, the drivers, because there's no one flying to a new city to do business or even to travel. So it's just a very down and out stock. And it's basically hitting a 52-week low this week. And it's going to be a hard time for this to recover just because it's just been hit so heavily by the coronavirus and the slowdown of travel worldwide. But you can bet your bottom dollar that it'll be coming back once everything is settled and things like that. Would I want to be buying here? Probably not. I kind of want it to kind of level off just a little bit more because you're buying really steep red down candles. And last but not least, we're going to look at Lyft. And I can't find it. There it is, LYFT. And it basically looks just the same. It's well below its 200, and it's basically hitting its all-time low. So that being said, let's go ahead and jump to the next sector.
Next generation DNA sequencing is the driving force behind the genomic revolution. Since 2003, the cost to sequence a human genome has dropped from nearly $3 billion to less than $1,000 today. And we believe this cost will fall to roughly $200 by 2024. So, what are the implications of this? Well, as costs continue to fall, next-gen DNA sequencing should become a standard of care within oncology, enabling clinicians to move accurately, track individuals' risk of cancer, treat diagnosed patients, and monitor for the recurrence of disease. Based on these cost declines, we estimate an annual market size of roughly $21 billion in 2024. While we believe next-generation DNA sequencing is a breakthrough technology that investors need to capture, more importantly, NGS should help turn healthcare from the treatment of symptoms into the curing of disease.
All right, so now we're looking at some DNA sequencing stuff and splicing of DNA, and this is going to be a huge medical breakthrough for a lot of diseases in the coming future. We're just understanding the technology and learning everything around this, and the one stock that comes to my mind is CRISPR Therapeutics, ticker symbol CRSP, and holy moly, this thing has been beaten down. Like, again, I am actually the furthest from a lot of medical or even the technology in the medical biological fields. I'm just not the most well versed, and I'm trying to understand a lot of what's going on here and what is the potential of going on here. And it sounds fantastic, but this stock just looks absolutely terrible. Basically hitting a very low here. Pump this out to a week here. Kind of had alert here where it hits $30. I might like to start a small position in that, a couple shares, small handfuls of that going forth if the technology is relevant and so forth. And another one that I was looking up is Edtis Medical, which is EDIT up here for the ticker. And this is basically doing the same thing on the sense of like it's been so beaten down. I'm not sure, just people just getting out of these positions. It's just been completely beat down. Is it just so overblown that this technology is not useful? I don't know. If you have any comments down below and giving me a little bit more insight of what I'm looking at or what's going wrong here, these things just have looked like they've just been beaten down just terribly, and something that I don't really want to be touching, to be quite honest. Another one that I saw was the Guardian Health. So we're looking at GH, and that one looks also somewhat kind of beaten up, but it's recovering a lot better than the other ones. And this one is a little bit more on the making of the genomics of the DNA, helping analyze for what DNA sequences and what parts of the DNA can be modified to improve XYZ and so forth. So again, if you have any comments or more insights on what I should be looking at in this section, please leave it down in the comment section below. I would greatly appreciate it. All right, let's go ahead and jump to the very last section.
Just a decade ago, a non-government-backed monetary system seemed neither feasible nor thinkable. And then along comes Bitcoin, an open, neutral, permissionless global monetary system with no reliance on the state, functioning entirely independent of the traditional financial system. Now, since the emergence of Bitcoin, we've witnessed the rise of a global battle amongst monetary systems, both sovereign and non-sovereign, and one in which we think Bitcoin is best equipped to win. If it does, the opportunity could be tremendous. By unlocking a new mechanism to store and transfer value, Bitcoin could serve as a catalyst for currency demonetization in emerging markets, protection utility against arbitrary asset seizure, and a digital store of wealth with the strongest form of jurisdiction-neutral property rights. These use cases alone could be a multi-trillion-dollar opportunity.
So Bitcoin, wallets, whatever, it's been, again, like anything else, people have just been selling this nonstop, having huge red down days, basically dropping from about 8,000 to about 5,500 within a day. Everyone knows that the magical limit of what's happening within Bitcoin between the overall power consumption to mine it and maintain it and being able to reap the rewards from it is around $3,400, I believe. And so once we pump this out, you can kind of see that this 3,000 level was a pretty key level, and it just kind of held it and made a nice little long bathtub roar higher. And now having pretty steep selling into this week, of course, with everything else. But overall on the monthly chart, I don't know. I can't honestly recommend Bitcoin. It's hard for me to put money into this. I did get in the frenzy before even these became exchange traded funds with Ethereum and Litecoin and a little bit of Bitcoin here and there. But this is kind of a thing that I don't know if this might be as big as other people say it is. Again, a lot of people are in the comments going to call me a moron, an idiot, or whatever, but I just don't see a complete value for the Bitcoin quite here, and how to invest in it. It just makes it super difficult to try to figure out what models you should be looking at and so forth. So that being said, I hate to leave it on this negative note on Bitcoin, but guys, if you have any questions, comments down below, please leave it, and I'll try to get to them and answer them. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!